Hello and good evening, everybody. Let me just set my sound. If you can hear me and you can see me well, can you just type yes in the comment section? First of all, Gong Si Fa Chai, everybody. Happy New Year. It's the 5th day, is it? I think. Hi, Brontok. Hello, Ken. Hi, Jatinder, Mavi, Wendy, Kui Fei. Thank you, Jatinder. I wish you get rich. You know what? I think the only greeting, right? If you compare with all the other greetings from other celebrations, there's like a Happy Deepawali, Selamat Hari Raya, Merry Christmas. But Chinese has to be wishing you get rich. That's the meaning of Gong Si Fa Chai or Gong Hui Fa Chai. Hello, Alvin. So, yeah. So it's not odd, right, that Chinese people always want to look for riches. Because that's the greeting that we have every year. All right, welcome everybody, and thanks for joining us tonight. Basically, we're gonna talk about how you actually use candlesticks to identify opportunities, right? And we are talking about the Singapore market, so I'll be giving examples on the Singapore market. And of course, in technical analysis, you can apply this not just in any stock market. You can apply this on commodities. You can apply this on forex. You can apply this on crypto, and whatever instrument that you are able to trade, lah. Right? Hi, Jenshan, Rasmawi, Hong Seng, Arul, Rosie, welcome. Once again, thank you so much for joining us tonight. I know it's still, some of us are still in the holiday mood, but I think this year's Chinese New Year has gone through just like that, right? We can only celebrate with the family, can't have open houses and so on and so forth. So here we are. Jenshan, because this is actually a Singapore segment, so we're gonna take a look at Singapore stocks, lah. All right. Heng ong hua. All right, so as usual, I'll just do a short presentation of what Candlestick is all about first, and then we're gonna apply on the Singapore market and basically see how you can apply this on identifying opportunities, especially when prices are falling, right? And you know what? There are stocks that started to come down, and of course, there are also a lot of stocks in Malaysia has started to go up, and in Singapore there are also stocks that has gone up and come down. So the question is, we always aim to buy low and sell high, right? And when the price starts to fall, the question is, when do we get in? That's always the question. Because it always makes sense when the price goes up and we just buy because it is going up. But when it's going down, that's the most difficult part, right? So the question is, how do we get in at the low risk possible, right? So Candlestick is one of the tools that I love to use the most, because it is pattern based. And for those who know me, I think you know that I prefer to use pattern-based kind of indicators rather than technical indicators, right? Because technical indicators are mathematical formulas, where patterns are more, it all depends on price movement. It all depends on price behavior, right? Because at the end of the day, when we look at technical analysis, we all want to basically understand the price behavior, price actions that forms the market behavior. And if we are able to understand the market behavior, of course, then we'll have an advantage, right? So let me share my screen. Okay, for those who just joined us, so tonight we're gonna basically learn a little bit about candlesticks. I can't really teach about candlesticks here tonight. We only have like 1 hour plus, so I'm just gonna share briefly what is candlestick about and how it's being used, right? Okay. And if you guys have any questions, you can type it down. and I'll answer your questions as we go on. Okay, let's start. Now, before we start, as usual, whatever that's being shared here today is for educational purposes only. It's not intended as any investment advice or whatsoever. If you want to look for investment advice, please do look for a professional licensed investment advisor. All right. So we're not going to talk about stock tips, when to buy, when to sell, and so on. But we're going to use technical indicators, specifically candlesticks, all right, to give you that kind of signal. Okay, so this is the signal. These are indicators based on candlesticks, not what I say, but what the market says. All right. Now, candlestick is one of the oldest technical analysis tools being used. Okay, it was being used in the 1600s, which means 1500 plus lah. Okay, by the Japanese traders to trade the grain markets, and it's still one of the most commonly used technical analysis today. Right, and so after hundreds of years and it's still being used, I mean it is still relevant 400-500 years ago, and it is still relevant right now. All right, and a lot of traders use candlesticks. Okay. I think everybody who learn about technical analysis will know how to use candlesticks. But the question is, how do you apply them? Right, that's the difficult part. So, just let me briefly share with you how candlestick is being formed. Right, if I think you are familiar with the left hand side of the chart, right, where we have that tick chart. Every single transaction that's being transacted in the market will be represented as the tick chart, and that tick chart can be in different time frame. For example, let's say this tick chart here, this whole day, this is 1 day movement. So when we try to summarize this 1 day information into a plotting style, then we use different styles like candlesticks, bar charts, line charts, and so on. All right, so if you are using the line chart, it only plots the closing price. Okay, so today's closing price, and then tomorrow, the next day's closing price, and it just basically plots the closing prices. But we do not have enough information because we all only know the closing price, whether it is higher or lower than the previous day. Okay, but we do not know what happened during that day. So when you use a bar chart or a candlestick chart, when you look at that one candle alone or one bar alone, it can basically give you four information. All right, the four important information that you can get from the price chart. And when I look at a candlestick chart, then I can basically visualize what happened during that day. All right, so for example, we all know that the price opened here. All right, during the day, it went down a little bit. Okay, and then it went up all the way up, and it closed at the high. Okay, so this is represented by this one candle pattern over here. And I'll share with you how it's being constructed in a short while. So when I see a one big long candle like this with a big body, right, then I know this is a very bullish movement. Okay, if it's a white candle. So if you look at candlesticks, we have the open, high, low, close information. Right, there's only 4 basic data that you can get: open, high, low, and close. And of course, you can also get the volume data. Right. And then if you look at the bar chart, for example, if you are familiar with the bar chart, the left horizontal line over here, that represents the opening price. The small horizontal line on the right, that's the closing price. Okay, and then we have this vertical line, right? The highest point of the vertical line is the highest price, and the lowest point of the vertical line is the lowest price. Okay, so this can be translated into a candlestick bar or a candlestick chart. Okay, so what happens here is this. Okay, in the candlestick chart, there is a body. All right, the body is like that full rectangle pattern that you see here. That's the body, and then you have the upper shadow or the upper wick, okay, and the lower shadow at the bottom. Okay, so now the body is the difference between the opening and closing price. Okay, because it is symmetrical, right? Because it's symmetrical, we do not know where the opening and closing is. Okay, unlike the bar chart, right? The bar chart on the left is the opening, on the right is the closing price. But on the candlestick, okay, there's no left or right, it's symmetrical. So to know where the open and close is, okay, it depends on the color of the candle. So in an old-fashioned way of drawing a candlestick, if the candlestick is not colored, all right, it's either black or white, lah, right? If it's not colored, if it's not filled, okay, that means the opening is at the bottom, the closing price is at the top. All right. So this is the open, this is the close, and the highest point, of course, is the highest price, and the lowest point here is the lowest price. Okay. So we have an up day if the candle is not filled or is white in color. Of course, today's software, you can color the candles. If you like up to be green, then you can color it as green. Then you know when you see a green candle, you know it's an up day, which means that the closing price is higher than the open. All right. If it's a filled candle, okay, then the closing price is at the bottom, the opening price is at the top. It means that the price has gone down. Okay. So if you look at a black and white candle, I always use black and white because that's how I use the candlestick pattern since the beginning, since I use the software, right? So I'm so used to black and white. Again, you can color this as red if you want to, or for Chinese and Japanese, red means up, right? So again, it's up to you how to customize the color of the candlestick. Okay, so I prefer the black and white. So when I see more white candles on the chart, that means I know it's bullish, right? So the good thing about candlestick is visually easy to see, right? You see a lot of white candles and less black candles, you know the market is bullish. If you see a lot of black candles, right, and very less white candles, then you know it's bearish, right? So and the open high low, I forgot to also mention earlier, right? That this time frame here can be 1 day, it can be in any time frame, it can be 1 hour, right? That means this whole movement here is 1 hour of trade. Then you have a 1 hour candle, okay? And then when the next hour comes in, you get the next hour candle, and so on and so forth, right? Or it can be a weekly chart, right? That means this whole movement here is 1 week of movement. Okay, so you have the opening price on Monday, the closing price on Friday, right? And the highest and the lowest price in between Monday and Friday. Okay, so you can use it in different time frames. So if you're gonna go in very short term, you can go like 5 minutes, 15 minutes. So if you put a 15 minutes chart, for example, every 15 minutes a new candle will be formed until the market closes. All right. Now, so we will show you this. Okay, when we buy and sell, there's always a strength between buying and selling. All right. It means that when there's buying, if there's a lot of buying strength, that means you have big volumes on buying, and very little selling volume. Okay, that means you know that price goes up. Okay, so if you try to figure out the demand and supply from the candlesticks itself, right? For example, if we have a white candle here, all right, a long one, and we have these wicks, okay, the upper shadow and the lower shadow, that means you know there is some bearish movement as well. The price did not close at the top, right? If the price closed at the top, then you have a full bodied candle over here. Then you have lesser bearish strength, right? So in this case here, we have like, you know, it takes this number of bulls, for example, about 10 bulls to push the price up, but it did not close at a high because there are 3 bears that push the price down a little bit. So if you look at a white candle, then you know that the strength of the bulls are bigger than the strength of the bears, right? That means the demand is stronger than the supply. Okay, if you have just one full bodied candle, we call it a marubotsu, right? That means most of the time the market is bullish. There's very little selling pressure. There's very little selling strength. All right. If we have one full white candle, and of course at the opposite, when we have a black candle, we know that there are more bearish strength than bullish strength. Now, why I'm sharing you this is because it is very important when you look at a candlestick pattern, then at least you know the relationship between the bulls and the bears. Right? Because at the end of the day, when you want to answer technical analysis, it's all about the demand and supply. It's all about the buyers and sellers, right? If you look at this, for example, okay, so the relationship between the open, high, low, and close, right, will form different shapes of the candlestick. Like here, for example, okay, this is called a doji. A doji is when the opening price is equal to the closing price or near the closing price. Okay, it doesn't have a body. Okay, so it opened here. Maybe it take one bull to push it up, and then one bear to push it down back again, and then another bear to push it down, and another one more bull to push it back again. Okay, so when we have the opening equals to the closing price, okay, the bull strength and the bear strength are the same. Okay, and that's why it's called a doji, which means uncertain. All right, it goes up a little bit, it goes down a little bit. At the end of the day, it closed back at the same level. So we have the same strength between the bulls and the bears. Okay, this one here is also the same. This is also a doji, but here you have a longer upper shadow, right? Which means that it takes probably about 2 bulls to push the price up. Okay, and to push back the price down at the same level, you need to have equal amount of selling pressure. So you have 2 bears to push the price down back again, and then maybe 1 bear to push the price down to this level, but it takes 1 bull to push it up back again, and therefore the price close near its opening price or equal to the close opening price. So here we have basically again another uncertain day, another doji, right? Because the price went up, it went down, but at the end of the day, there's no direction. It closed back at the same level where it opened. All right. So that's the doji pattern. Now, where these patterns form are important. So later I'll show you examples, lah. All right. So candlestick patterns are flexible. Okay. But they are already like I'm not sure, maybe nearly 100 chart patterns you can find on a candlestick, right? They can be like a 1 candle pattern, 2 candles pattern. That means it takes 2 candles to form 1 pattern. Okay? If we talk about 3 candles pattern, that means it takes 3 candlesticks to form 1 pattern. So you can go up to like 5 candle pattern, 7 candle pattern, and even 10 candlestick patterns. All right. So of course, if you look at 10 candlestick patterns, you are looking at a little bit longer term now, because it takes 10 candles to form 1 pattern. Okay, so you can look at those patterns, and you can, if you are able to identify a pattern which is not identified before, right, then you can name the pattern as your pattern. All right, but you know what? Mostly with the patterns that you find probably already had a name, right? So you don't need to go and find another pattern. Candlesticks are visually easier to see, right? Remember I mentioned to you, if you look at a bar chart, for example, right? Bar chart doesn't have a body. So one look at it, I have to figure out where the opening and closing price is on the bar chart. Okay, but on a candlestick, it's much easier. Okay, if I see a white candle, I know it's an up day. If I see a black candle, I know it's a down day. Of course, when you look at the whole chart at a glance, when you see there are more white candles than black candles, you can say the market is bullish. Right? When there are more black candles than white candles, then it's a bearish market. Okay, so one look at it can tell you a lot of things, right? So it's visually easy to interpret, okay, compared to the other chart types. Okay, so there are 3 types of chart patterns. Okay, when you look at a candlestick pattern, it can indicate you 3 indications. It can give you 3 movements. Yeah, the first one, which is most commonly used, are called reversal patterns. It means that when the price, for example, moving into a downtrend, and when we see a reversal pattern, we expect the price to turn upwards. Okay, similarly, if the price goes higher and higher and higher, and you see a bearish reversal pattern, then we expect the price to turn downwards. Okay, so it's a reversal. So it's like look at an end of a movement. Okay, for continuation, it's like when we see this pattern in a trend, we expect that trend to continue. For example, if the price go higher and higher and higher and higher, and when we see a continuation pattern, we expect the price to continue to go higher. Okay, similarly, when the price goes down lower and lower and lower, when we see a continuation pattern, then we expect the bearish movement to continue going lower. Okay, and the third one is uncertain, right? Like the doji pattern I just showed you earlier. When you see that pattern, it just basically tells me, you know what, the market is uncertain today. I do not know what's happening. All right. So, but the uncertain pattern or the doji pattern is important depending on the location of that pattern. Now, for example, let's say you have white candles, white candles, white candles, white candles. You know that has been going up, let's say, for the past 3 days, right? Up, 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 higher and higher. And then suddenly today you see a doji. Okay, what does it indicate? How come that the price has gone up for the past 3 days very strongly, but today it is uncertain? Okay, so when that happens, then there's a high chance that the price is probably going to turn the other way around. It's probably going to turn downwards, because for the past 3 days it's been going up, but today the momentum has lost its steam, right? The price trend, the bullish trend has lost its momentum. So when we see this doji pattern, then we're going to expect the price to turn the other way around. Okay, but of course not all the time, okay. it is important to also use other indicators to confirm the candlestick pattern, which I'll share with you as we go on. All right. Now, candlestick pattern emphasize on the relationship between the opening and closing price. Okay, most of the candlestick patterns are based on the body of the pattern. Okay, the difference between the opening and closing forms the body. Okay, so in candlesticks, the opening price will determine the direction of the day. Okay, it doesn't mean that the price gaps up. Okay, initially it was bullish, right? Initially it was bullish, but it's the closing price that confirms the action. Meaning that if the price open higher and the close higher, that means the market has been bullish throughout the day. Okay, but if the opening price is higher but the closing price is lower, it means that the market has somehow turned direction. Okay, the shadows are there to basically just show you the intraday movement. Okay, which can be important as well depending on the pattern that is formed. All right, later I'll give you some examples. So one of the limitations is this, right? Is subjected to the interpretation of the user, because candlesticks is also like an art. It is not like a moving average indicator, right? Where you either see it or you don't. You know, it's mathematical, calculated. Okay, so you get a value for every indicator, whether it's MACD or stochastic. The interpretation is very straightforward. But when it comes to pattern based, right, like candlestick, it can subject to the interpretation of the user. Okay, maybe I see a pattern, let's say an engulfing bull, but another person don't see it, right? Or if I don't see an engulfing bull, but some other people may see the engulfing bull, because the criteria for the patterns may be different for different people. All right. The other limitation is it does not set price targets. Okay, candlesticks, it only tells you whether the price is reversing, whether it's continuing, or whether it's uncertain. Okay, so if you buy, for example, it doesn't tell you how high it's going to go or how low it's going to go. All right, so there are no price targets based on candlesticks. Okay, another one is, again, there are so many patterns, but I think this is not really a limitation anymore, because number one, when you learn candlestick patterns, you have to remember all the patterns. If there are 100 patterns, then you have to memorize them, right? So you may lose some good signals if you've forgotten those patterns. Okay, but right now with the advancement of technology, with software, right, actually the software can actually identify those patterns for you automatically, so you don't even need to remember those patterns. But of course, when it comes to software interpretation, the formulas that you put in, they may not be able to find the pattern that you want. Okay, but if you know how to do it, I think you can use it to identify all the candlestick patterns that you are looking for. Okay, but previously when we don't have very canggih kind of computer software, you have to memorize all those patterns. All right, so I still remember about 20 years ago, I used to go and paste all those patterns over the walls, right? So that because there are like 50 or 60 patterns that I want to identify, then I may forget them. I may have forgotten them, right? So at least when I print it and paste it on the walls, I can look at the chart and see, I think I remember this pattern, right? Then I can confirm it with the patterns on the wall. Okay, I actually learned this from another quite a older trader lah, because he's like 60 plus when I know him 20 years ago. So he's now probably about 80 plus. I'm not sure whether he's still around or not. Okay, but this guy's a local trader in the futures market. So local traders are basically they are professional traders, right? But they trade on their own account. Okay, so they trade in the futures market. So this guy used to paste all those patterns on the wall. Okay, you go to his room, you see all candlestick patterns, and this guy don't use software, right? So because in the futures market, it's only trading the KLCI futures and also crude palm oil futures, right? And he also trade the STI futures and Hang Seng futures and a few more indices lah, right? So that was why he's trading. So he actually don't use the software, but he actually draw those charts on the graph book, on the graph paper, right? He actually draw those charts. Of course, he do not draw every 5 minutes lah. So he only have like a daily chart that he draws, right? So when he draw those charts, and of course there are only like 6 or 7 charts that he draw. Okay, if you want to draw the whole stock market, is going to be difficult, right? There are 1,000 over counters that you draw. You might as well just pay for a software and let it do it for yourself. I'll let the software do it for you. Okay, but so this guy actually draw those candlestick on the graph paper. Okay, and then he can identify those patterns. Okay. So right now, a lot of software allows you to, or it actually gives you those patterns automatically. So it makes it much easier. All right. Okay. So let me just recap a little bit. So we have a bearish reversal pattern, right? Where when the price goes up, okay, this black line over here, the price goes up. And then when we see this pattern, candlestick pattern here, then we expect the price to come down. It's a reversal pattern. Okay, the opposite is, of course, when the price goes down, and then when we see a pattern, we expect the price to go up. Okay, a continuation pattern, a bullish continuation pattern is when the price is bullish, and then suddenly we see a pattern here. Okay, a bullish continuation pattern, then we expect the price to continue to go higher. Right, a bearish continuation pattern is when price goes down. Okay, we do not we see the continuation pattern, and we do not expect to reverse upward, but we expect the price to continue its bearish trend. Right? Uncertain is, of course, it's still a question mark, because uncertain means it doesn't tell you whether it's going to reverse, or it doesn't tell you whether it's going to continue. All right, it just tells you that, you know what, the market has paused. I'm not sure where is it going to go. So when we look at doji pattern, for example, we can't just use doji pattern alone. Okay, but you have to use it with maybe as a sub pattern in another candlestick pattern. Then it becomes stronger. All right. So I'll take a look at charts later on and see whether we are able to identify some of these patterns. So at the end of the day, this is what we want to look for, right? If we are able to identify, let's say, these bottoms here and the tops, and if there is a candlestick reversal pattern, then of course you can actually buy at the low and sell at the high, right? Buy at the low and sell at the high. The question is, can we buy? All right. How do we identify these patterns? Okay, some of you probably, if you already learn about candlesticks, you can see some patterns forming over here, right? So candlestick pattern is always easy to identify them on historical prices. That means when the price has already is history, right? It's already done. You can't buy and sell at these levels anymore. You can only make decision right now. Okay, so this is where the tricky part is, because it's always difficult to make a decision using charts at the current prices, because we can't see what's going to happen next. Right, like here, for example, if I want to buy, I do not know whether the price will go up or go down. Okay, but if, let's say, if it's historical, like here, okay, if I'm going to sell here, or I know the price is going down, so this is a good price to sell, right? And if I'm going to buy here, and I know that the price has gone up, then I know this is a good price to buy. Okay, but what about right now? Okay, so this is the difficult part, right? And this is where we want to address, right? How do we identify, for example, if let's say the price is starting to come down for the past 2 days, and we see certain rebound over here, can we buy over here? All right. Okay, now before I continue, I just want to make a few announcements. All right, if you guys have any questions, you can just type those questions down. All right, regarding what I've just shared. All right, and then I will answer your questions as soon as I finish the announcements. So on the 27th of February, all right, Singapore, they actually have a trading festival, right, on the 27th of February. It's a one full day of like an online conference, right, where there are many different speakers that you can actually join and listen to, right, on the 27th of February. Okay. And then they also have a trading competition, right? So we have the conference or the summit on the 27th of February. And then from the 1st to 5th of March, there's a trading competition. And this is where you stand a chance to win 5,000 Singapore dollars, right? Not ringgit. So 5,000 Singapore dollars is about more than 15,000 ringgit. All right. So to get more information how you can participate and also to join this trading summit on the 27th of February, you can just type in the link that we given here. My colleague will basically post the link into the comment section, so they can click and go and register yourself. All right. So it's bit.ly Trading Festival 2021. Okay, so these are some of the speakers, and our own Alvin Wong will also be one of the featured speakers there. So it's going to be from 9:30 a.m. until 5:45 p.m. So there are different speakers there where you can join, right? And one of the notable speakers that I can see here is this guy called Jack Schwager, right? He's the author of the book called Market Wizards. If you have not read the book My Market Wizards, I suggest that you go and buy those books and read. There are many market wizards, all right. There are market wizards for stocks, market wizards for futures, but you can just get anyone that you are trading or which market you are trading. Okay, because this is a book where it interview all those successful traders, right? And of course they will not share with you their secret on how they make money, right? But you can see some of the tools they use. Okay, some of them use indicators, some of them don't. Okay, but they all have similar principles, and that's where we actually learn from this book, right? And bear in mind that those who are interviewed in the book, right, before they are being interviewed, their trades are being audited first. Okay, so these are all real traders where the trades are being audited. These are really people who make good money in the markets, and you don't find their names everywhere one, right? These are people who make money and just keep quiet and then just retire somewhere, right? But there are some there's also a number of familiar names that you may know in the trading scene. All right, so get a book from Jack Schwager, and after reading that book, then when you go to this trading summit on the 27th, then you can ask him questions. All right. So of course, the 1st to 5th of March is where the trading challenge is, and you can also participate and stand a chance to win 5,000 Singapore dollars. Now, I'll also share with you how you can download today's presentation slide. You just have to go to WhatsApp us at 603-840-82070. Right, 603-840-82070. My colleague will also put the number in the comment section. Right. Now, if you are interested to open an account to trade the Singapore market, these are the brokers available online, and also brokers here in Malaysia where you can open an account and trade in the Singapore markets. All right, the two online brokers are Poems and Tiger Brokers. So these are pure online brokers, right? And of course, if you are a client of any of these broking houses like M Equity, CGS, CIMB, Interpac, Kenanga, Maybank, Public Invest, UOB Kay Hian, you can also go there and approach them and also open an account to trade the Singapore markets. If you want to have more information on the Singapore market, if you are still new, okay, one of the best websites that you can go to is the SGX website, right? This is where you get a lot of information. You can get investor resources. You can even have analyst research reports, right? And they have an app for you to also download and get all this information at your palm. All right, so just go to SGX website. This is where you get a lot of information, and they also have an SGX Academy, all right, where there are also a lot of training that you can actually attend, all right, online. And the academy is where you also learn how to invest or trade the Singapore market. All right. If you wanna also go into a group that we have created specifically for the SGX market, you can also go to ET Online Campus SGX. Okay, and this is where we discuss about the Singapore market. All right. Okay, let's go on. Okay, I'll make the announcement or some short announcement later, and when we end. But let's go on with today's topic. Okay, so this is one of the Singapore counters. Right, this is Jaffa. Okay, let me answer some of the questions first. Sheila, no, this is not a landline. This is a number that you can WhatsApp. It's a business number. You can actually add that number into your phone, and then you can WhatsApp that number. All right. DT, the link is not working. Which link is that? The trading festival one, is it? Okay, I think maybe because that link is after festival is immediately go to HTTP. Maybe you just have to copy and paste the HTTP onwards. DT, maybe you're banned in Singapore, is it? Okay, sure, it should be working. A colleague already tested it. All right. Okay, all right, DT. Thanks. Okay, so let's go on. So this is Jaffa, and I don't simply pull out the stocks. If you still remember last week, right? I give you a list of tradable stocks, and if you want to get a list, is still there. You can again WhatsApp us at that number. There are quite a number of resources that you can actually download. You can download the rest of the other stuff as well if you want. It's for free, and of course you can also download the tradable stocks that I've actually uploaded it last week, right? So basically, tradable stocks are stocks that meet these two requirements, right? One is that the stock has good liquidity. That means it has a good volume and also value. And I'm looking at a daily trading volume of above 1 million shares a day, right? Averagely, okay, over the past 6 months. So these are stocks that are traded above 1 million shares every single day, averagely, not every single day, and over the 6 months. All right. That's the first criteria. The second criteria is that this stock has volatility. It has movement. So if I want to trade a particular stock, if I'm trading in the short term, I need stocks that is volatile, right? I need stocks that are volatile so that I can make and take advantage of the short-term volatility to make profits. Okay, so the volatility criteria is basically this stock has to move at least 4% a week. Okay, at least 4% a week in the past 6 months. So that means every week this stock move at least 4%. Whether it's up or down, it doesn't matter, because when the price goes down, you have opportunity to buy, and when the price goes up, it's time for you to take profits, right? So it has volatility. So that tradable stock list, you can download it. You just have to go to that WhatsApp number at 603-8408-2070. All right. So Jaffa is one of the stocks in that list. So that's why I bring it out. Okay, it's not that because and one of our SGX session that we had, I think last month, we had the CEO of Jaffa to be with us. All right, and if you want to know more about this company, you can always go back and look at our last or the previous live session that we have recorded on our Facebook page. Okay, so you can also look at this company. The reason why I just bring out this company is because, number one, it specifically meet the tradable stock criteria. Okay, so the examples later, I give you a second one that stock is also in the tradable stock list criteria. So you notice that this stock has movements, right? It is not a stock that don't move, after a long period of time. Okay, this stock has some movements. So this stock will move, okay, based on the criteria that I set, at least 4% a week. Okay. Yeah, Alan. So you can WhatsApp us at that number. You should have that tradable stock list as well. Okay. All right. So Jaffa has movement, and you can see the price is already. This price is moving into an uptrend. We have that 30-day moving average line, okay, which acts as the trend indicator in the short term. Right. If you apply a moving average which is less than 30 days, it is used to identify short-term trends. If you use something which is like 60 to 90 days, we are looking at the medium-term trend. And if you use a 100-day moving average and above, like a 200-day moving average, then you're looking at a long-term trend. Okay, so here I'm looking at a short-term trend, and we can also use the moving average as a support indicator. All right, like here, for example, I apply a 30-day moving average, and when the price moves into uptrend, you can see that this 30-day moving average provided the support. Right, the price came down to this level, it rebounded and formed into an uptrend. Okay, and as the price goes up, of course, when it reaches a certain level, it forms a resistance. Okay, a resistance level is where the price attracts a lot of sellers and the price starts to correct downwards. Okay, there is a resistance here, and we have a correction in the downtrend. Okay, so now that the price has gone back to the 30-day moving average. Okay, now previously when the price comes down to the moving average, it rebounded, right? Now it come back to the moving average once again. Question is, can it rebound, right? We have the RSI indicator, and you know what? The RSI indicator corresponds quite well with the moving average. Okay, if you use a 30-day moving average, you divide the 30-day into 2, you get 15, right? So you use a 15-period RSI to correspond with the moving average. Okay, that means if you use a 100-day moving average, then you use a 50-day RSI. Okay, you'll find that when the price is above the moving average, the RSI will be above 50, right? If the price is below the moving average, the RSI will be below 50. Okay, and when the price cross above the moving average, like here, for example, right, when it was below the moving average, and then it start to cross above the moving average, and that's when the RSI cross above 50. So there's a correlation here between the moving average and the RSI. Okay, so like in this case, when the price comes down to the moving average, you see the RSI has pulled back to its middle level or the 50 level. So question is, can the price rebound? All right. So like in this case, the price rebounded, and this is history, right? This is historical. I can't do anything here anymore, okay, because this is already done. Okay, but what happened now is I may have an opportunity right now because this is the second opportunity, right? The price came down to the moving average, and you can see the RSI comes down to the 50 level, which acts as a support level. But question is, can I buy over here? Okay, so now this is where I will start to apply candlesticks, right? Because candlesticks, remember, if I'm looking for a reversal pattern, okay, then I'm expecting the price to reverse upwards. So the price has been going down over the past few weeks, right? It has been going down, and it has now gone down to the moving average. Okay, but question is there an indication of a reversal? Okay, so the reversal pattern is basically an evidence, all right, or a proof that the price has indeed found support at the 30-day moving average over here. Okay, because when we use the moving average, we expect the support level to be here. Okay, but that's the expectation, right? That's how that's when we use the 30-day moving average, and we use it to identify where could possibly be the next support level, and in this case, it's here. Okay, but the price can go down and go lower, isn't it? Okay. So how do I know that there is some support? So I can't just simply buy when the price goes down to the moving average. So what I want as an evidence is that the price starts to rebound and form a reversal. Okay, so what happened here, if you can see, as the price starts to come down, all right, as the price starts to come down, when it goes near the moving average, you can see there's this two doji pattern. Remember the doji pattern, right? That two cross over here, right? So here it was going down with a black candle, and then suddenly it becomes a little bit uncertain the moment it starts to approach the 30-day moving average. Okay, so again, it's uncertain. I cannot use an uncertainty pattern to tell me whether the price is reversing or not. All right, but what happened is that if you look at this pattern, the next candle, okay, you have a white candle here, okay, a very strong white candle. Okay, and if this white candle, if you look at this white candle here, if it overlaps the previous candle, that means the whole body eats up the previous candle. Okay, we call this a bullish engulfing pattern. Okay, this is an engulfing bull or a bullish engulfing pattern. So a bullish engulfing pattern, okay, when happens when the candlestick, okay, like in this case, this white candle here, okay, overlaps the previous candle. Okay, like in this case, it does not only overlap the previous candle, all right, but it overlaps like 1, 2, or 3 candles combined. Okay, it just like eats up the 3 candles. So it's a very strong reversal pattern. Okay, so number one, the price has pulled back to the 30-day moving average, which is where the support is expected, right? Now, how do I know it's expected over here? Because if you look at previously, and the price pulls back to this level, so this is a reference, right, where the price rebounded from the 30-day moving average. So now the price came down to the 30-day moving average again. Okay, if I do not see a candlestick pattern, I may not want to react, all right, because the price can still go lower. But if I see a bullish candlestick reversal pattern, and remember, this is a bullish reversal pattern, and therefore I expect price to go up. All right. So if you look at this here, this was where the bullish candlestick pattern is, and you can see the price continue its bullish trend. So it really rebounded from the 30-day moving average, and it continued to trend higher. All right. So remember, one of the limitation in candlestick is as the price goes up, when do I take profit, right? Because it does not show you the price target. Okay, but of course, you can use other indicators to tell you the price target, right? Like in this case, when the RSI goes above 70 or 80, you know it's already overbought. And you can see that the price has moved way above the moving average. That means, you know, it's probably time to take some profits. All right. So this is a very good example of a bullish engulfing pattern, okay, together with price moving towards a support level, in this case, a moving average. And if you're able to buy at this reversal pattern here, okay, this is your decision point, right? And we can't see here what happened. What's going to happen? Okay. So this is where the challenge is. Can we buy here? Can we trust the candlesticks pattern? Okay, so if we react on this candlestick pattern, then we're able to ride on this particular trend. Okay. Now let's take a look at another example. This is the same chart, right? Same chart. Remember, this is the candlestick pattern that we looked at. So the price went up. We can't do anything, right? One of the things that I don't do is as the price goes up, I do not want to chase those prices as it goes up. I know sometimes it can be tempting. For example, if the price is here, okay, we did not buy at the bottom here, okay, and the price is already here. And because the price is already quite high, we're thinking ourselves, you know what, I think cannot lah, right? Price already go up so much. But then the next day, the price go up again. And then we'll be thinking, you know what, I should have bought yesterday. All right. And then the price keeps on getting higher. And every day it gets higher. So it's always tempting. If you still remember, or if you last week's session, I talked about, you know, the buyers and the sellers, right? The emotions between the buyers and sellers. So if you missed that session, you can always go back into our last week's session. It's recorded on our Facebook page. You can view that session. All right. So I do not want to chase prices. So the best I can do is wait for the price to come down. And like in this case, okay, if the price goes away from the moving average, when do I get ready? Okay, I know that this 30-day moving average has provided support once here. Okay, and it also provided support here. And when the price pulls back to the moving average, like here, for example, all right, am I expecting a support? Am I expecting the price to turn upwards? Okay, because 2 times it has rebounded from the support level. Can this be the 3rd time? Okay, so when the price pulls back, I know that it's coming down. Okay, for the past 1 week, it has been coming down and it's now near the moving average. Question is, can I buy over here? Okay, so if I want to look for an evidence whether there is support, right? Whether there is support, then I have to wait for a bullish candlestick pattern to be formed here. Okay, because that bullish reversal pattern on a candlestick will give you an evidence or a proof that there is support. But if there is no pattern, that means there is no evidence that there is support at the 30-day moving average, right? So like in this case, there is no pattern here. There is no like white candle that engulfs the previous pattern or whatever other pattern that you can identify. Okay, there is no known pattern here lah. Okay, no known Japanese candlesticks pattern over here. Okay, and if you look at this, the price continue to fall. Okay, you can see the next 2 black candles forming over here, right? So if I use candlestick pattern, then I will not be buying over here because there is no reversal pattern as the price falls to the 30-day moving average. Okay, and that if that doesn't happen, you look at this, the price broke below the moving average and start to move downwards. Okay, so the good thing about candlesticks again is that, you know, it provides you an evidence, right? It provides you a proof that the price is being supported. Okay. Let me see your question. So Sheila is asking, is the 30-day SMA a resistance that turned into support? Yes, a moving average can only provide either resistance or support, right? If the price is above the moving average, you can use the moving average as support. And if the price is below the moving average, then you use the moving average as a resistance in the downtrend. Okay. Ang is asking for bullish engulfing. If it closes at the price where it did not break the upper channel. Oh, you mean the upper shadow, is it? It's not the upper channel. Yeah, candlestick pattern emphasize on the body, so it does not need to break, or it does not need to overlap the shadow. The sticks. Okay, if you wanna look at it, so it does not need to overlap this. It just need to overlap the previous bodies. Okay, so remember I mentioned earlier that candlestick gives emphasis on the body of the candle to form those patterns, right? Not those shadows. Okay, Melissa, using Jaffa as an example, if the price at 30-day moving average is a bearish engulfing, but it is lower volume, this is the day before cut or hold, how would you take volume into account or strategize? Now, in this case, I will not use volume. Volume is one of the indicators that you can use, right, to also indicate further, right? But the volume indicator is not the indicator. It's not a must-have indicator when you look at candlesticks, because sometimes with low volume, the price can still rebound. Okay, because whether the volume is high, the most important thing is whether it is bullish or bearish in that particular volume. Right? For example, let's say today's volume is 100,000 shares, right? But in that 100,000 shares being transacted, there are more buying than selling. Okay, of course, when there's more buying than selling, you will have a white candle, right? But imagine you have 1 million shares being traded. Okay, but that 1 million shares being traded, you have like half of it bullish strength and half of it bearish strength. So the price will not be able to rebound as well, right? Because there's still a lot of selling pressure. Okay, so most importantly is in that trading volume, okay, whether there are more buying or selling. Okay, and this can be, of course, confirmed by looking at the color of the candlestick, lah. All right, so like here you mentioned, right? If the volume is lower, but if it's a bearish engulfing pattern, bearish means it's black candle, right? Then of course it is not a reversal pattern. All right, we're going to expect the price to fall further, even though it moves to the 30-day moving average. Okay, because remember, the 30-day moving average, the price can either rebound from it or it can break and turn into a downtrend. Like in this case for JAPFA, the price has broken below the 30-day moving average. That uptrend is over and the price is probably forming downtrend. Okay, I hope I answered your question, Melissa. If you have any more, if you need any more clarification, you can always ask again. All right. Okay, let's move on, right? Okay, this is Keppel. I'm looking at a weekly chart here, so you can apply this, like I say, on the long term as well, right? Because Keppel prices, Keppel is not one of the counters that are tradable. It's not in the tradable list stock, right? But of course, I think everybody knows Keppel, right? They are shipping and logistics company, and they have a port, right? In Singapore, one of the biggest ports, probably in the world. Okay, and here I'm applying a weekly chart. Okay, so again, I have the RSI indicator. So not only that you can apply candlesticks in an uptrend when the price pulls back, right? In an uptrend, and we want to enter like what I've shown you in JAPFA earlier. But what happens if, let's say, the price has gone down really aggressively and the price now is being oversold, right? Like in this case, if you see Keppel here, over the past 3 weeks, the price has gone down quite steeply. For 3 weeks, right? It was here. It was okay at first. It was trading above this level, being whole here, and then the first week started here, selling pressure, and then second week also another selling pressure. We have a black candle, and the third week is even lower. Okay, and that time you look at RSI, the RSI on the weekly chart has also gone below 30. So it is low. All right, it is quite low right now. But question is, now that the price is low, can I buy? And the good thing is price is low. Okay, and we know that we have to buy where we can look for opportunities when the price is low, because trading is all about buying low and selling high, right? Or you can buy high and sell higher if you want to. Okay, but now when the price presents itself when it's really low, okay, the question is, can it go lower some more or not? Okay, so this is where Candlestick is able to help again, right? Because if I see if the price has gone very low, but if there is no indication that the price is reversing, that means the price can even go lower. All right, what we want is the price to start to form a reversal pattern. In this case, of course, it is still early to tell because the price is still at we still see a black candle here, right? With also a lower shadow here. Okay, but there is no pattern forming here yet. All right, so I will not do anything. The best I can do is to at least wait. Like in this case, it's a weekly chart, so I have to wait for the next week and see where the price moves. Has it formed a candlestick pattern? All right. So I only know currently that the price is low. All right. But question is, can I buy or not? Okay. Does it provide an opportunity, or can the price rebound and turn into a reversal? All right. So the next week you can see a white candle here. Okay. Another is like a doji pattern. So the following week was quite uncertain, right? It's quite uncertain. Okay, only after the second week, you can see this same pattern forming as well as like what we see in Japfa, right? We have this one white candle here, a long white candle that overlaps the previous body. Okay, so we have an engulfing bull again. Okay, or a bullish engulfing pattern. So this candle here engulfed the previous pattern. So now it tells me that I think the price is going to rebound, right? Because that bullish reversal pattern indicates that the price has found its bottom, okay, and we're going to expect the price to rebound. Okay. So like here in this case, the price is at 530, and again, if I'm going to buy, let's say around 530 or 520 or 540 over here, question is, where do I set my target price, isn't it? All right, so again, you can use the previous resistance, like in this case at 670 or 660 as the resistance level to set your target price. Okay, or you have any other tools to set your target price, you can set. Okay, so at least I know that if I'm going to buy this level, I'm going to expect this price to be the lowest, okay, because that's where the reversal pattern is, and for the price to rebound. Okay. So here you see the price has found its bottom, right? After you see a bullish engulfing pattern, the price start to move up, okay, into an upward trend. And here it again depends on where you want to set your target price, okay, because this is a weekly chart, right? So one candle here represents 1 week of movement. So here is probably about 3 months of movement, and the price rose from 530 to 620, a $1 movement, which is about 20%, right? In 3 months. All right. Okay, so again, candlesticks. What I'm applying here basically a reversal pattern called a bullish engulfing pattern. It's quite a very simple pattern to use, you know, and that's the reason why I put here, right? But of course, you can also identify other patterns. If you look at previously, there's a hammer pattern here, right? Hammer pattern here. If you are able to identify them, okay. But whenever you see a pattern, whether it's an uptrend when the price pulls back, then it forms an opportunity, because this pattern provides you an evidence, like in this case, that the price has bottomed out in a very strong downward movement. Okay, or in the case of Jaffa, the price has bottomed out after the pullback of a correction. Okay. So what we have identified are basically reversal patterns. And of course, we also have continuation patterns. We also have uncertainty patterns, right? But most commonly used one are the reversals, because that's where people want to find evidence whether the price has found support or not. Or if you look at the opposite, when the price goes up, if let's say we have a bearish engulfing pattern, okay, it simply means that the price has found its stop, right? It's really found resistance, and we probably expect the price to turn downwards. That if we have a bearish reversal pattern. So what we have gone basically so far are bullish reversal patterns. Okay. So any questions? Okay, so what I did was I did a scan, okay, in the Singapore market today. Okay, the good thing is, with today's software, you can actually get a software to filter out stocks that meet a criteria, right? For one of the criteria I always use is, of course, the candlestick pattern. So I did a scan in the Singapore market today. I can't find any counter today that has a candlestick reversal pattern. All right, but let me just try if I were to scan yesterday. Okay, and again, if you have any questions, you can ask those questions right now. Okay, I'm scanning yesterday's price and see whether we have any pattern or not. Okay, Rosie, can RSI also indicate reversal? Okay, RSI basically just tells you that the price is oversold or overbought. It does not give you or indicate a reversal. So that's why you can actually use the candlestick indicator to identify a reversal pattern when the price is oversold, right? Similarly, when it's overbought, right, you can actually wait for a bearish reversal pattern that tells me that, you know what, I think the overbought is ripe already, right? The price is turning downwards. So we're expecting a reversal downwards. Okay. Let me see whether we have anything. Oh, okay. We have one pattern yesterday. Okay, I'll show you in a short while. Thomas asking ARBB. ARB is a Malaysian counter then. Okay, we're supposed to only look at Singapore stocks. Huh? Okay, Thomas. We only look at Singapore examples today. Chiang asking how to determine the time frame. Now, the time frame depends on your objective, right? For example, if I'm trading very short term, if I'm trading intraday, for example, then definitely I can't use a daily chart, right? Because a daily chart can only be formed at the end of the day. So you can apply, let's say, if you are trading intraday, you can apply like a 5-minute chart or a 15-minute chart. Okay, and that also depends, right? Because sometimes, especially when you're trading stocks, right? Sometimes the counter don't move after like 5 minutes, okay, or 1 or 2 minutes. Okay, maybe only 2 or 3 transactions in 5 minutes. So it's very difficult to put in a 5 minute chart. Okay, but if you want to do that, then you have to make sure that that every 5 minutes when you apply on that chart, okay, it has some volume. Okay, it has some movement. If not, you can't apply that very low time frame. But of course, if you're trading in the futures market, then you can apply a 5 minutes, 10 minutes because there's a lot of volume every 5 minutes. So, okay. So the answer to the question is, again, it depends on your objective. So if I'm an investor in the long term, then I do not need to look at the chart every 15 minutes, right? Or I don't even need to look at the chart every day. Okay. Like in the case of Keppel, for example, if I'm looking at Keppel as a long-term investment, I want to buy only when the price start to come down. Okay, I can use a weekly chart, right? So wait for the weekly chart to go oversold, get it really low, and then wait for a candlestick pattern. Okay, and then you make decisions based on the weekly chart. Every week you look at the market, not every day. Okay, so if you're position trading, that means you want to buy now and sell maybe 1 or 2 weeks later or a few days later, then you can use a daily chart. All right. Okay, so let me show you a counter that has a pattern yesterday. Let me just load it up. Okay. Okay, I'm using investing.com. Okay, let me stop my screen. I'm just going to share the investing.com. Okay, so this is capital land. All right. So let me just work on this chart. So you can see here price is moving in an uptrend, right? Since November was the bottom, the price started to go into an uptrend. In November, it's trading about 250. It went up to 350, $1 here, right? It's almost 40% in just 3 months. And now it started to pull back again. All right. So what pattern was it? Okay, let me just put it here. Okay, because this was yesterday, right? Okay, so yesterday, this is the pattern. Okay, this pattern here is called an up kick pattern. Okay, there's a Japanese word for it, so it's like a direct translation. It's called an up kick. It's like a kicker pattern, right? Where if you look at this, right? So if you look at this movement, of course the price has been going down, but over the past 2 weeks has been going sideways, right? Is starting to find some support here. Okay, again, this is not an advice, right? I'm just basically just applying the indicators to tell you or to give you an indication what the indicators are saying. Okay, and we all know that if you look at this, when the price pulled back over the past 3 weeks, the price formed support here at 310. Right, the price was not able to go below 310 over the past 3 weeks. So the first one was here on the 1st of February. Okay, it went to 310 and then rebounded back, and then it just went sideways. It went sideways, and then here it goes to 310 again. 3 days ago, again it did not go below 310, and then it rebounded back again. So this pattern here, this two candle here pattern is this, right? So I'm just gonna, this is the biggest zoom I can go. So the price has gone down for 2 days. You can see the red candle here, red candle. Okay. And then what happened here is the price opened higher, because if you look at this candlestick, the price closed somewhere here at somewhere around 310. Okay. And then the next day it opened at 313. It opened 3 cents higher. All right. And then it closed at 315. And it closed higher than the previous open. That means it goes higher than the previous body. So this is a kickstart or an up kick or a bullish kicker pattern, right? That tells me that the price is finding support. Okay, but previously it also found support over here. It also found support now, twice finding support. Okay, so at least I know that, if I'm gonna, I'm just saying if I'm gonna buy, let's say, this particular counter, I know where the support level is, right? I know the support level is at 310, because twice it formed that pattern, and this is the second time, right? And if the price is able to stay above 310, then I'm expecting the price to reverse and continue this bullish trend. Okay, because this is a correction that we see since January until today. It has pulled back. Now the correction is finding some support at 310. Okay, so question is, can it go higher? All right. So the question is, are we able to take action here or not, lah? Right? And we are, whenever we make a trading decision, we always have there are always pros and cons, right? Now, of course, if you're gonna buy at around this current level, okay, at about ringgit, at $3.13, it is much better than buying it at 350 lah. That's for sure, right? So I'll be telling myself, lucky I didn't buy at 350 or 340, right? And now the price has come down to 315, so I did not buy the high. Okay, and another thing is that I know the support level is at 310. Okay, 310 is a support level. So if I'm going to buy at 313, for example, at the current price, I know that I know that if the price goes below 310, there is no more support. So if I'm going to trade, for example, this particular counter, if I'm going to buy at 313, I'm going to put a stop loss below 310. That means if the price goes below 310, which where the support level is supposed to be, then I will get out, because the support is not there anymore. So 310 is a support level. But if you can stay above 310, then I'm expecting the price to rebound and continue its trend. And although I don't even want the price to go higher than the previous high, even if it can come back to, let's say, 340 to 345, okay, or 345 here, is good enough for some profits, right? Okay, because you're going to buy at 313 or 314 or 315, there's a potential to make about 30 cents here if the price rebound and continue its bullish trend, or even higher than 345, right? If the bullish trend were to continue. But my risk is only 3 cents if I buy at 313. Okay, now so this is how normally we evaluate whether that trade is worth taking or not, right? My risk is low, but my potential if the price rebound is much more than my risk. Okay, and this pattern here, this is where, at least when you look at a candlestick pattern, I can, if you can, you have to look at other indications, other patterns to also find a trading, or to make a trading decision. Like in this case, I know that the price already found some support, although it's still going down. There's still more red candles, but the moment it breaks below 310, then I know that's where my stop is. Okay, but if it does rebound, even if it goes and tests the previous high, there's already about a 10% potential movement, okay, with a very low risk. All right, Sun Power, Thomas, SLVX. What's SLVX? Do you prefer to buy at a dip or buy at breakout? Okay, I buy both, right? Again, breakout, you have to have a very strong bullish movement, right? Because when you buy a breakout, you'll be buying at a high, okay, and expecting to sell higher, right? And this is when you need to look at a few other factors, like whether this particular counter that you're trading is in a sector that's currently in play, right? In a strong bullish play. Like for example, if you're in a semiconductor in a sector right now, okay, if the price breaks out, then of course I can buy high, and because I know that the trend in the tech sector is strong, then the price can go even higher. Okay, but if the counter belongs into a sector which is not in a trend, then I will not dare to buy on breakouts lah. I will wait for a reversal. I will wait for a dip. Okay. Surya, what to do when gap happen at the price we are waiting for? Yeah, so depending on the price, okay. Now, very simple. Okay, look at this CapitaLand for example again. Okay, let's say my target price, if I were to buy this counter, if my target price is at 345, okay, and the current price is 313, my stop loss is 310. Okay, so if I'm going to buy at 313, for example, okay, and I put a stop loss at 39, okay, let's say below 310, 39, then I have a 4 cents stop loss. Okay, but my potential profit will still be about 32 cents. So I have a 32 cents potential profit with a 4 cents stop. I have a reward to risk ratio of about 9 times, right? Now, what happens if let's say the price gap up, right, and it opened at 325, let's say. Oops. Okay, so let's say it opened at 325. Let's say only lah. Okay. So the question is, if the price gaps up like this, can I still buy or not, right? Or should I wait for another confirmation? So two things I can do here. Okay, I know I'm supposed to buy here because this is a support level. The candlestick already showing some reversal pattern. But what if the price is at 325? Can I still buy? So same thing, right? If you look at, if you're going to buy at 325, okay, and you put a target at 345, that gives you a 25 cents potential, 20 cents potential profit, right? 20 cents. Okay. But if my stop loss remain here at 310, this gives me about a 15 or 16 cents risk. So now, question is, are you willing to risk 15 cents because that's where your support level is to potentially make 20 cents? So if you look at the reward to risk ratio now, it's not interesting anymore, right? If you're going to buy at 313 or 315 at the current price, then your reward to risk ratio is quite good. But because the price has really gone up, then your reward to risk ratio becomes smaller. So if the price gaps up, if it gaps up slightly, for example, tomorrow it opens at 320, right, then it's still okay because you look at the potential profit and your risk is still small. All right, your reward to risk ratio is still big, at least 2 to 1. Okay, if it opens, let's say at 315, 316, or 317, then it's okay because you're going to be buying here. Your potential reward is here, potential profit is here, your stop loss or your risk is down here. Okay. So now, of course, if let's say there are no patterns and you see a gap, again, when you look at candlestick, there are also gap patterns. All right, you can't just immediately jump in when a price gap up. You expect price to be bullish. No, it doesn't happen. In fact, if you look at the Malaysian market for the past 1 week, a lot of times when the price gapped up in the morning, but after that, at the end, most of them fell. All right, so don't do it. So when the price gaps up, you have to wait for some other confirmation or wait for a pattern to form. All right. Okay. SLVX. What is SLVX? Silver Lake. Okay, let's take a look at the chart. Huh? Okay, so I'm looking at Silver Lake chart. Okay, now one of the things that you want to do in technical analysis is this. When you open a chart, all right, when you open a chart, like for example, like Silver Lake over here, okay, and you see there are a lot of these dojis around. You see it here, and they cluster, right? Here there are three dojis over here. Here there are like 4 dojis over here, another 2 here, another 3 here, and then 1 here, another 2, 3 here, and then here. Now, when you see so many dojis on the chart, okay, don't apply technical indicators on these charts. Why? Because every single point of data, if this is uncertain, okay, and you use a moving average use this data as a calculation as well, right? And this year probably the volume is very low, that's why you get a doji. It's uncertain. So when you have so many uncertainty data on your chart, your indicators will not be accurate as well. Okay, that includes candlesticks, right? Because you'll be seeing so many of these dojis, uncertain, and then you see white candle, green candle, white, or in this case, green and red, right? It doesn't tell you a lot of things because the price don't move that much. Okay, so when I see a lot of these dojis pattern cluster, like see, it has been around, I mean, this particular chart, there's so many dojis around, right? Then I can't use on this particular chart. Okay. So what can I do, right? So the best I can do for this kind of chart when you have so many dojis, right, is you put it to a higher time frame. Okay, for example, when you use a weekly chart means every 5 days, right? So it's like combining 5 of these candles into one, then it makes the price movement easier to identify instead of so many dojis. All right, and when you apply indicators, it works better as well. So let's say if I'm gonna change this to a weekly chart, okay, and once that doji is gone, now uncertain is gone, then you have a much clearer chart. Okay. So if you look at a daily chart, right? If you look at the daily chart, it's like this, right? Okay. Of course, if you look at this movement here, there are this downward movement. There are more red candles than green candles. That means it's bearish, right? And then it's very difficult to identify a chart pattern here, right, on the candlestick if there are too many dojis. And then if you change this to a weekly chart, now it becomes clearer, and you can see for the past 1, 2, 3, 4 weeks it's been going down. Okay, and there are no indications of reversing yet. Okay, although the price has found support, is not found support. The price is now near the support level. Okay, remember I can draw the support line here, right? This was a support. This was a support level in October last year, November last year. Okay, but question is, can the price rebound from here, right? That's the question. So now on the daily chart, I may not be able to see the pattern, but if I see a bullish reversal pattern here on the weekly chart, then that bullish reversal candle will provide that support or that evidence that there is support over here. Okay, so for this counter, you have to use a weekly chart. Okay, in fact, for any counters, if you see so many dojis clustered together, you have to change it to a higher time frame. Okay, so let's take a look at Thomas will look at Sun Power. So let's take a look at Sun Power. Okay, so this particular counter is in a very strong bullish trend, right? If you came last week, or if you joined me last week's session, remember we can draw a trend line and see where the support level is, right? Or alternatively, you can also apply a moving average. Okay, so how do I apply a moving average, right? Okay, so in an uptrend, the moving average should provide support, right? Like in this case, default on investing.com is a 9-day average. But this 9-day average, let me make it thicker. Okay, that 9-day average did not provide any support at all. Okay, the green line is a trend line. Okay, so the price keeps on crisscrossing above the moving. So the moving average did not provide any support. So I need to adjust the moving average so that moving average provides support in this uptrend. Okay, so I just have to maybe put it a bit higher. Let me just try 30, right? The normal one that we put in. Okay, so you see 30 here, maybe a little bit lower, 25. Okay, so if I'm just going to bring that green line out first of the picture. So you can see this green line, this moving average here acts as support, all right? Acts as support previously, and it's going up, okay? And now you see the price has broken below that moving average. So now, if I'm just going to bring you here, right? Okay. So the price has pulled back towards the moving average. Okay, yes, it's come out to the moving average. And if you still remember this pattern here, this green candle here overlaps the previous body. Right? So this is an engulfing bull. So when we have an engulfing bull over here, we expect price to rebound, isn't it? Okay. You're going to expect price to rebound because the price has pulled back to the moving average, like the first example I given you on Japfa earlier. All right. And now there is a bullish candlestick reversal pattern on that 30-day moving average. Okay, so we're expecting the price to rebound upwards. Okay, so it did. The price rebounded the next day. It went up, all right, and then it went up also on the following day. Okay, so if let's say you buy somewhere here, the next day at 90 and a half cents, it goes up to 95 cents. This is already a 5% movement in one day. Okay, and then you see a doji pattern here. So now here we actually expect the price to continue to go higher, right? But what happened here was the price started to pull back. Okay, instead of going higher, the price started to pull back, but it's still above the moving average, so still fine, right? Because the moving average is still the support. Okay, so if I'm going to buy, let's say I buy over here, as long as the price stays above the moving average, then still okay. Okay, and then the next day the price, okay, still fine. The moving average is still at the support level, so I can still hold. Okay, but the moment the price breaks below the moving average, then I have to be very careful, right? So in this case, it's still okay. The price actually gapped up and closed at the moving average, but it looks like it's not going anywhere, right? But never mind, because the price now is at the moving average is at 91 cents, which is same as the price level that I bought. So even if I sell when the price goes below 91 cents, I just break even. I don't lose money, right? Okay, so there's a red candle here. Okay, and then there's a green candle here. So still okay, right? Still finding support. Okay, but still trying to hold over here. Okay. But the moment the price continued to fall, okay, and it failed to go back above the moving average. You can see the price is now moving downwards, right? There are more red candles than green candles. This will be an indication, you know what, I'm not expecting the price to go up some more. Maybe I'll just exit and, maybe take a very small loss or just break even over here. Okay, and then there are no reversal patterns. Okay, price just goes sideways and now it's here lah. Okay, but what I'm worried about is for this particular counter, for example, because this moving average has been providing support since October last year, right? And now it's being tested. Okay. Okay, so if there is no rebound and the price don't go back above the moving average, which is at 93 cents, now the price is trading at 90 cents, right? If it don't go back above 93 cents, then it's probably just going to stay below the moving average and probably come down some more. Okay. Singapore Airlines. Let me see. Okay, Singapore Airlines is basically going sideways now, right? Let me see. So Singapore has been trending sideways, right, since December last year. It's been going. It's actually it was in a correction. Okay, the price actually rallied since November last year. It went up from about 340 to 460, and then it goes sideways, right, for this range for some time, and it's now starting to break above that level. So it looks like this is breakout. This is nothing to do with candlesticks, right? There's a bullish engulfing pattern here in this downtrend channel that you see here. Okay, earlier this was on a 2nd of February, right? When the price came down. If you look at this was the downtrend. This was a downtrend channel. Okay, this was a downtrend channel. The price actually came down here in mid of January. It came down to this bottom line here, and then we see this engulfing pattern again, right? We see this engulfing pattern here. So this is a very strong indication, and the price is near the support level of the downtrend, and therefore we're going to expect the rebound. Okay, so of course this is on hindsight, right? Because this is already done, so the price has gone up right now. Okay, so if I were to look for a bullish reversal pattern, right, I have to wait for the price to come down, right? Yeah, like in this case, I have to wait for the price to come down to $4, where the support level was, right, previously, and then wait for the bullish reversal pattern. But now it's really going up. Okay, but now what you see is a breakout of this resistance level. Okay, a breakout of this resistance level. So the price, again, if it can stay above this resistance level, the price may start to turn bullish and go higher. Right? Although now this is SIA, because you look at the SIA previously, the price was trading. I'm not sure whether it's adjusted or not, right? Even look at here in 2018, it was trading at $8 and now $4.40 because of COVID, right? So the question is now that the vaccine and all that is placed, but I think everybody now is trying to bottom fish, right? And if you can hold long term, then I think it's fine, right? At least for the next 1 year, because the vaccine is probably gonna, the borders are probably going to open probably next year instead of this year. I do not know, right? But definitely there's a breakout over here. That means there is renewed interest in Singapore Airlines. Okay, and like I say, if the price is able to stay above 430, because this is where the breakout is, then this bullish trend should continue. Again, this is not an investment advice. I'm just basically interpreting what the chart is suggesting, what the chart is saying. All right. Okay, so it's already 9:32. Okay, guys, I have to end here. You know what? Thank you so much for joining us tonight. You can download the slides, all this information on where you can access SGX website, and also the trading festival on the 27th is all on the presentation slide. And of course, we also have trading programs, which is also on our website. We actually have one trading program on the 27th and 28th, which is conducted by myself. If you want to learn more about candlesticks and the rest of the indicators and how to use it to come up with trading plans, right, then you can actually join us on the 27th and 28th. So if you're interested to learn or to attend a trading workshop, all you need to do is just type in TCP, because that's what our trading program is. It's called Trader Circle Program. Just type in TCP, or when you download the slides, the information is there as well. All right. So thank you so much, guys. I hope that today's lesson will give you an idea on how to use the candlesticks and also the indicators to make better trading decisions. So once again, Happy New Year, Happy Chinese New Year, and have a good night.